Hey, this is Trader Travis, and in this video, what we're going to do is our 2011 year-end review. We're going to evaluate the performance of the stock market for the year 2011 and see how well or not so well it did. But first, let me start off by evaluating how the market started off in 2012. Let's see the performance for the first day of 2012 here. So you see on 2012, January 3rd, 2012, the stock market, well, actually, I'm just going to reference the S&P 500 here. It's a generally accepted definition for the stock market. And you can see it had a large spike up. And actually, let's look at a one-day chart. Actually, we'll see even better. So one day, let's look at a one-day 10-minute chart. We see the S&P 500 took off first thing, trading early in the morning, rose up a little bit, and then it kind of drifted down for the rest of the day and wound up still closing up for the day 1.5%. But it had went up as high as 2% for the day. So it started off pretty strong for the year, and people on CNBC were all excited, and people were, talking about, well, maybe this is an indication on how this year will do, and everybody was going back and forth giving their predictions. And I was sitting there watching the TV like, hello, does anybody remember 2011? Like the 2011 where on 1/3/2011 the S&P closed at 1271.89, and then a year later on 12/31 it closed at 1257.60. And you can just do some quick back of the envelope math to see that you take your ending price and you minus or subtract your beginning price. That equals a loss of $14.29. So the S&P, which is a general accepted definition of the stock market, the S&P, which is the benchmark that most mutual fund managers compare their performance against. And since we're talking about the benchmark, in case you don't know, most professional money managers, well, the studies show that only roughly 10 to 20% ever beat the S&P's performance in any given year. And it's not the same 10 to 20% each year. And so put another way, that means 80 to 90% of them fail. So 80 to 90% of them fail. They don't do what you pay them to do. Now you can do your own research, but the research I've seen backs this up. And one report in particular is one called the Spiva Report, and you can also read it in tons of other books. Once you are aware of that knowledge, you'll see it more. And so the grand S&P that everyone's chasing and trying to match their performance against, it pretty much ended the year flat. So what that means is there was a whole bunch of drama in the stock market, but the buy and hold investor at the end of the year essentially made no money. And one thing that's really sad is that also means that those who were eagerly waiting to retire or waiting for their retirement accounts to recover from the beating they received in 2007 to 2009, they have to wait even longer to retire. And so let me take a moment to explain why. In the Option Profit Formula Mentorship and Coaching Program, we have a training module called Buy and Manage Secrets. Now, in that training module, we walk people through step by step. We log into a real money account. We take the whole traditional buy and hold method. We add a little twist to it, and we showed students with a real account how we tripled a long-term, boring old mutual fund account just by doing the same thing that everyone else does, just doing it a little differently. And in that training, we also talked about something called the secret investing loss formula. And that's that formula we pick we kind of tease about and say that it's the one your money manager doesn't want you to know about. Because if you understood how the math worked, you think twice about taking that advice when you're calling them because your account is bleeding money and they're like, well, just hold on and wait. Don't do anything because it'll eventually recover. Well, yeah, that joker is not going to be panicking because you're losing money, because they get paid whether you make or lose money. Second of all, truth be told, it's better to be an active and an educated investor than an inactive and uneducated investor. And when we talked about this investing loss formula, how we led into it is we pull up a picture of the stock market going from about 2007 to 2009. And we explained that from October 2007 to March 2009, the stock market lost roughly 54% of its value. And then from March 2009 to December 2009, it rose 60% higher from its low point. Now, the logical mind, and I was on a board of trustees for a large company's 401k plan. People were coming and saying, hey, the stock market rose up higher than what it fell. So why is my money still not back? Why haven't I made more money? Because the logical mind will look at that and say, well, I should be making money. But it doesn't quite work that way. And let me give you a little investing trivia. If you lose 50% of your money and then you gain 50%, are you back to where you started? No, you're not. You're only halfway back to where you started. However, our brains don't catch that. We think we should be back to normal. And here's how it works out. If you start out with $100 in your investment account and you lose 50% of it, and this represents what the stock market did, lost roughly 50% or half of its value, then you now only have $50 left in your account. Now, if those $50 in your account increases in value by 50% or $25, you now only have $75 in your account. 50% or half of $50 is only $25. Now, if you want to get back to the $100 you initially started with, your $50 would have to double in value or have 100% return on investment just for you to get back to break even. And so that's why I said it's sad, because a lot of people are waiting to retire, waiting for their accounts to recover. If the stock market as a whole has 100% return on investment from its low point in March 2009, they're essentially just getting back to break even, and now this excludes, if they're adding more to it and everything else. But I think you get the point I'm trying to make. And this is essentially why managing your investment losses is vital. That's why we call it buy and manage secrets. We don't call it buy and hold. It's manage. You manage your investments. You just don't stick your head in the sand. A lot of people don't realize that there are a lot of choices and adjustments you can make to your portfolio to where you can still come out a winner. And that doesn't necessarily mean selling, because often selling is the worst thing you can do. So I'm not advocating people sell. They're just different choices you can make. But despite the stock market's performance in 2011 was still a monumental year. And I don't think people should look at 2011 negatively. I actually think you should look at it positively. And here's why. Because we don't get many second chances in life. Now, if the stock market took off last year and did outstanding and had like a 50 to 60% return on investment, everybody would be on a profit high and they would just totally forget the lessons of the past, and the pain they felt in the last bear market would kind of subside a little bit. Not really go away, but just subside. They would be so focused on, wow, we made a bunch of money. Everybody would feel like a stock market genius. Well, because of the stock market's lackluster performance, it gave us a chance to sit and think. It gave a second chance to expose some of the flaws in the buy and hold method that has been marketed to you for ages. The lackluster performance also gave a second chance to reinforce those flaws so that you now truly understand you can't sit on the sidelines and be a buy and hold investor anymore. It gave a second chance for you to finally get the fact that times have changed and you must change with them. But here's the good news though. You have plenty of people ready and willing to help you out. And some of the programs I'm familiar with are MarketClub.com coaching, sponsored by Adam Hewison and Market Club. I had a young gentleman who couldn't join my program because it was closed. He wound up joining Market Club, and we keep in touch. And he said it's a great program. And I've been following Market Club and Adam for years, and they always are huge on education, and they do everything with integrity. They really want you to succeed. I have another student, a different student, who also wanted to join our program at a different time of the year, but we were closed again because we usually sell out pretty quickly. Well, he wound up and took personal coaching and options express, and we keep in touch. And he also said, that it's a great program. He's learning a whole lot. And so both of these two guys I keep in contact with. Sometimes they ask me questions just so we can fill in the gaps and stuff. And of course, we also have our program, which is the Option Profit Formula Mentorship and Coaching Program. Now, as most of you all know, that I'm not attached to who you learn from, but I'm fanatical about the fact that you need to learn how to invest from someone. Now, I have to be careful here, because then it opens up that debate. People are like, well, why should I pay for all this education? Education should be free, and you can learn the same stuff in these courses for free online, on the web, or in a book. And I want to caution people with that line of thinking, because I used to think like that. Honestly, I never wanted to pay up for a course, because all my friends, including myself, and I go to online forums and they validated my train of thought. They say, oh, don't pay for that. That's too expensive. You can find the same stuff for free online. Okay. Well, now that I'm on the right side of the money equation, I look back, all the people who say that are broke, including myself at the time. Now, not broke, poor, and struggling. That broke meaning that they're not rich. They're not succeeding in life financially at the highest level. I've never once heard a rich person say that, because rich people believe in investing in their education. Rich people understand that, in order to get rich quick, the way to get rich quick is to accelerate your learning curve. And the way you accelerate your learning curve is to find somebody who's already rich, find somebody who already has money, and then have them teach you how to make money. Yeah, it may cost you more on the front end, but it'll save you time. The quicker you can learn, the quicker you can make money. And it's the same way in any other area of life. If you think about somebody you admire, somebody you look up to as a role model or mentor, ask yourself, did they get to where they're at without any help? Did they have any coaches, role models, mentors, something? Would you let a doctor perform brain surgery on you if he told you, oh, I didn't want to pay for medical school. I found the same information for free online or in a book. I learned how to perform brain surgery by reading a book. Would you let that person perform brain surgery on you? So you have to take the same thought process toward your own education. I mean, it's your money. You've got to be more serious about it. But the main point I want you to understand is that I'm not asking you to give up what you're currently doing, any of your investment styles, anything. My main goal is just to help you become proficient at trading options so you can at least have some type of monthly income you control. Because when you are in control of how much money you make, that's what they call true financial freedom. And that's what the option profit formula is all about. And if you're not aware of the option profit formula, it's the formula we base our entire coaching program around. It's designed to give you a source of income that you control, and that at some point in the future, hopefully the near future, will either equal or exceed what you currently make in the corporate world. And let me tell you from personal experiences, when your daily expenses are paid with income you generate and income you control, then your choices in life are nearly limitless. But it takes a specific mindset. Instead of looking at options as a way to get rich quick, you have to look at options as just a tool. It's just another tool to give you more choices in life. But let me take a moment real quick and back up a little bit and look at the performance again in more depth of 2011, and then show you some of the trades we made. And so I can show you in real life what I'm talking about as far as giving you more choices in life and different things you can do because you're an options trader.